Thank you so much. Can see you. We also see Mr. Ibrahim Labaran from First Pension Custodian Nigeria Limited. Thank you so much. Laura, thank you for joining us from Khaled Consulting. We look forward to having a very engaging time today. Thank you, Etim. I can see you from Radix Pension Managers. Welcome, everybody. Let's just wait a minute or two to allow the rest of our participants to join before we start. Thank you. All right, I think we'll just kick off. Oh, Mr. Tunji Andrews, thank you for joining us. Mr. Abiodun Shode from Veritas Glanville's Pension Limited, thank you. I can see you in the chat box as well. So we're just going to be starting this now. We don't want to waste your time. Thank you again. Hello and welcome. My name is Tijesinimi Arawa. I'm a member of the EFINA team. I will be anchoring this event today. Thank you for joining us at the launch of our Access to Finance 2020 Insights on Pension and Financial Inclusion. We look forward to having a very engaging time. I would quickly run through the agenda, but before I do that, as I mentioned earlier, I don't know if we have new participants joining us. If you're just joining us, thank you and welcome. Please put your name and the organization that you're representing in the chat box so that we can get to know you. Now, I'll quickly run through the agenda just to give us an idea of how we're going to use our time today. We'll start with the opening remarks, and then we'll go to the keynote address, after which we'll have the presentation proper of the A2F 2020 Insights on Pension and Financial Inclusion. After that presentation, we're going to be having a presentation by Kimbox, and then the most engaging panel discussion. And we look forward to a wonderful time together. Just a few house rules. A recorded version of this webinar will be available on EFINA's YouTube channel called EFINA Nigeria. So in case you want to go back or share the link, we can share that in the chat box so that is available for everybody. We would also love to hear from you even during the event. So if you have questions, please place them in the Q&A section or in the chat box. Members of the EFINA team will be aggregating those questions. We'll post some to the panelists, or we would also be answering some of that even in the chat box as well. I think that's about it for the house rules. Again, as you're joining us, kindly put your name and your organization in the chat box so that we can e-meet you or virtually meet you. Right about now, I'll be giving the floor to my Chief Executive Officer, Ashley Emmanuel, to give us the opening remarks. Thank you.
All right, thanks very much, TJ, and welcome everybody. It's good to see those of you who have joined so far, and thanks for sharing the introductions in the chat. So welcome. My name is Ashley Emmanuel, as TJ mentioned, CEO of EFINA. I think many of you are aware, but for any who are newer to engaging with us, EFINA is a financial sector development organization. We promote inclusive finance in Nigeria. And EFINA has been working in Nigeria for a long time. We helped set up the National Financial Inclusion Strategy in 2012. And when that first strategy was done, one of the key targets that was outlined in that strategy related to pensions. recognizing the important role that retirement savings plays in financial health of Nigerian adults. So in the past few months, we've actually been having some conversations with people in the sector, including Oguche from the Pension Operators Association of Nigeria, Tunji Andrews, who's also on the panel today, from the FinTech Awaba. And it became clear that there could be some benefit to EFINA doing some deeper dive analysis in using our rich access to financial services in Nigeria survey data, and kind of unearthing more insights about the current landscape of pension ownership and usage in Nigeria. Also really to highlight opportunities for expanding access to inclusive pensions for all Nigerian adults. So today, we're going to share those insights from the EFINA research and have some discussion about what do we do as various stakeholders here to really drive more widespread access to pension accounts. We're really honored to have some knowledgeable guest speakers on this topic. As TJ mentioned, we'll have, we're honored to have the Commissioner for Administration from PENCOM, Dr. Farouk, share some opening remarks on behalf of the PENCOM Director General. We'll share some insights from our research and have a presentation by Pinbox as well. And then later we'll have a panel discussion. I'll introduce the panelists at that time to really sort of unpack our opportunities and how we can, what we should do next based on those insights. So I think TJ has covered the housekeeping, as she mentioned. As we're going through the presentations and discussions, please put any questions or comments in the chat or the Q&A boxes, and we'll either pick those up online or we'll then highlight some of those questions when we take discussion at the end of today's session. So thanks very much again for joining us. Without further ado, I will invite Dr. Umar Farouk Aminu to share some opening remarks on behalf of the PENCOM Director General. Over to you, Dr. Farouk.
Well, thank you very much, Ashley. Good morning, everybody. I could see Gautam. I don't know from where you have joined, Gautam. Probably it's afternoon or evening there. I wish you, all the best. I have this like a couple of pages that have been drafted by the Director General that we just run through, just to say about what we are doing on the macro pension plan. So as a preamble, I'm reading DG's pages now. It is my utmost pleasure to deliver this keynote address at the launch of Access to Financial Services in Nigeria 2020 survey. This insights on pension and financial inclusion. I wish to congratulate the management and staff of EFINA for yet another milestone in conducting this biennial survey on access to financial services, which has become a veritable source of credible market information for stakeholders in Nigeria and indeed beyond. This year's event, which seeks to highlight insights on pension and financial inclusion, would undoubtedly provide a robust platform for stakeholders to deliberate on enhancing pension products, particularly the macro pension plan. It would also energize ongoing discussions on possible approaches to align concerted efforts towards addressing pertinent issues affecting access to products and services in the pension industry. This keynote address, therefore, discusses the macro pension plan within the context of the National Financial Inclusion Strategy, provides synoptic guidelines and features of the macro pension plan, including some implementation challenges. You would recall that the National Financial Inclusion Strategy was launched in 2012 by the Central Bank of Nigeria to improve access to financial services and products by the Nigerian adult population. This followed the 2010 EFINA Access to Financial Services survey, which indicated that only 36% of Nigerian adults had access to financial services. The strategy thus aimed at achieving a 34% increased access to financial services and products by the year 2020, which is attaining 70% inclusion rate. The financial inclusion strategy is driven by robust collaboration amongst regulatory agencies, including the Central Bank of Nigeria, National Insurance Commission, the National Pension Commission, Securities and Exchange Commission, Nigeria Deposit Insurance Corporation, the Nigeria Communication Commission, amongst others. In its efforts to expand the coverage of the contributory pension scheme within the framework of the National Financial Inclusion Strategy, the National Pension Commission developed key initiatives which are currently being implemented. The Commission's target of extending pension coverage to 20 million contributors is in line with their 2023. Unfortunately, we are not there, and I don't think this is achievable given the situation we have at the moment. But that's the vision. So this is in line with achieving the National Financial Inclusion Strategy target of ensuring that 40% of adult Nigerians are covered under the contributory pension scheme. The Commission's key strategy to drive this coverage is the extension of pension coverage to self-employed and the informal sector of the economy through the macro pension plan. The commencement of the macro pension plan in March 2019 is a significant milestone in implementing the contributory pension scheme since its inception in 2004. The macro pension plan is a tool for achieving one of the objectives of the contributory pension scheme, which is to assist improvident individuals to save in order to cater for their livelihood at old age. Due to this imperative, the Commission has put in place the necessary infrastructure and regulatory framework to ensure the smooth implementation of the macro pension plan. Some of these measures include establishing the macro pension department within the Commission, so as a structure, as a function for handling all issues regarding to their plan. We established a new directorate, which is being headed by a director. So issuing implementation guidelines, information technology infrastructure upgrade through the enhanced contributor registration system to enable registration of targeted population and introducing the RSA transfer system. The Commission has given considerable thought to the peculiarities of the persons in the informal sector in the design and implementation of the macro pension plan, and introduced significant flexibility to encourage broader participation. So when you look at the guidelines on the macro pension scheme, what it did is, in terms of registration, we developed the enhanced contributor registration system, as mentioned earlier, which allows for a flexible registration process of eligible persons via the multi-channel platform of the PFAs. The essence of this is to leverage technology to simplify registration processes, reduce documentation, and communicate the personal identification number to the RSA holder in real time. In the same vein, the development of the RSA transfer system enables registered contributors to change their PFAs in accordance with the regulation. There is also issues covered under the regulation on eligibility for persons to participate in the macro pension plan, that these persons must be 18 years or older with legitimate sources of income. This is taking the fact that people under 18 are not considered as eligible, sort of say, are not considered as full adults, under the Nigerian laws. So we consider only people who are 18 and older, and they must have legitimate sources of income. But this covers the self-employed persons that belong to a trade, profession, cooperative, or business association, self-employed persons with a business registration as a company, partnership, or enterprise, employees operating in the informal sector who work with or without formal written employment contracts, and other self-employed individuals. And in terms of accumulation, we allow individuals to contribute whatever they can, whenever they can, and whatever they contributed is going to be split 40-60%. 40% goes to contingency withdrawals, while the 60% goes to the retirement benefits section, or say aspect of the plan. So they can't touch the 60% until retirement, whenever that is due as enshrined in the regulation, while they can touch the 40% contingency to solve some personal issues or whatever they want to do with the money. But this can only be done 3 months after making the initial contribution. So when they make the initial contribution, the money has to remain in the account for 3 months before they can make the 40% contingency withdrawal. But thereafter, they can make the contingency of withdrawals as desired. I think if I can remember very well, it's like they can do that once every month, but the first one has to be after the 3rd month of making the initial contribution. As I mentioned, 60% portion goes to pension and upper retirement or attaining the age of 50 years. We maintain the 50 years here, even though people could start their membership of the plan at 50 or older, because that is what is in the Pension Reform Act 2014. But this does not mean that if someone is 50, he cannot touch the money. No, he can touch the money. That's the 60% pension portion of the retirement savings account. So the whole essence is to make it as flexible as possible, but within the confines of the provisions of the law. It is imperative to note that all benefits payments are made through central bank approved channels based on approved guidelines and compliance with the qualifying criteria. In the event of the individual demise of a contributor, the RSA balance is paid to the beneficiary, named beneficiary, or the next of kin as appointed by the contributor before his or her demise. So just give you a few numbers before I close. In 2016, the pension industry initiative set out to register 8 million RSS under the macro pension plan by 2020. Unfortunately, we couldn't start the plan until 2019. So at the moment, total registration, this is as of the end of 3rd quarter of this year, stood at 71,434 participants in the macro pension plan. They contributed 196.64 million naira within this period. However, available records reveal that actual performance of the macro pension space lagged considerably behind the projected figures. And part of the reason for this lag was the delay in launch of the plan, which I mentioned. We were just able to launch it in 2019, which was done, if we can all remember, by the President and Commander-in-Chief of the Federal Republic in March of that year. So that actually delayed the the implementation of the plan, and indeed this lagged figures. And indeed, the lack of attitude, or I would say appetite by the pension operators to drive it. We have just about 4 PFAs now reporting investments and even registrations, even though a lot of them had registered, but not all PFAs had registered participants. So it's something that are working within the industry to try to address. So indeed, some of the key challenges are low level of public awareness and knowledge of the workings of and benefits of the macro pension plan. Majority of the contributors lack an adequate understanding of retirement planning and financial literacy, and this is one big problem in Nigeria. So all choices regarding selecting PFA to the mode of retirement benefits withdrawal, which resides solely with the individual contributors, are often hindered. Other critical challenges mitigating against the implementation of the macro pension plan include inadequate automation of the registration, remittance, and benefits administration processes, which the Commission is still trying to address. We have done so much with the registration aspect, but in terms of remittance collection and benefits administration, we still boggle with a lot of paperwork. There is also difficulty in obtaining the requisite means of identification and the national identification number, which the federal government has made a policy that all regulators have to work with National Identity Management Commission to synchronize our data and domicile virtually that data. So all registration are tied to the national identification number now. And unfortunately, not many people are aware of these things, so obtaining one is a bit challenging. But the Commission is working with NIMC as National Identity Management Commission to see how we can ease these this challenge. And there is also poor identity management, data capture, and information sharing amongst really agencies in the country. So to conclude, I say the Commission is committed to whatever suggestions I will get from these discussions this morning. And we're always open to such criticisms and new ideas so that we improve on the plan. Hopefully, we'll be able to come next year and say, well, we have done very well with all the recommendations that we are going to receive today. Thank you very much.
Thank you very much, Dr. Umar Farouk Aminu. Thank you so much for that. We're looking forward to the actualization of all of these plans and the uptake of micropensions in Nigeria. Going on, before I just move on to the next item on our agenda, if you're just joining us, welcome again. We're glad to have you here. The first thing we'd like you to do is to introduce yourself in the chat box. Just tell us your name and the organization you're representing so that we can meet you. I mentioned earlier that there's a recorded version of this webinar on EFINA's YouTube channel called EFINA Nigeria. So it will be great for you to refer to that video, just in case you miss a moment or two from here. Also, if you have questions, kindly put it in the chat box as well. The EFINA team is able and they're ready to start aggregating those questions, and then we'll discuss that later on during the webinar. At this point of the agenda, I will be introducing the EFINA research lead. Her name is Dr. Oluwatomi Eromosele. She will be presenting the A2F 2020 Insights on Pension and Financial Inclusion. Over to you, Tomi. All right, Tomi, are you there?
Thank you, TJ.
All right, thank you, welcome.
Good morning, everyone. I'm just going to pull up the slide deck. Sorry, the chat. Okay, while we're getting the slide deck off, just confirm that that's been done. I will just speak to I will just go on and then we'll have the slide deck before we get into the main content. So good morning again, everyone. Thank you for joining this webinar. We are disseminating key insights from the EFINA's Access to Financial Services in Nigeria 2020 survey, just providing some deep dive insights on pension and financial inclusion. So over the next 20 minutes, I will share insights that will help us kind of understand the state of pension in Nigeria. Also, just initiate some conversations around the progress that we've made, the challenges that we currently are facing, and the opportunities for action towards achieving the 2020 National Financial Inclusion Strategy targets that have been set by stakeholders. Okay, good. We have the slides up now, so thank you very much. So we'll just move on to provide some context on the Nigerian population. The A2F 2020 survey puts the adult population, that is individuals who are 18 and above, in Nigeria at about 106 million. We have a predominantly rural population. About half of the population are female. We have a young population with 5% age between 18 to 35 years. And at least 4 in 5 own a mobile phone. So we're becoming, that's a huge increase that we've seen. We also have over 80% of adult population that are formally educated. So that's a high, educated population with high digitally active population as well. And when we look at the primary income sources for the adult population, we see that 45 million adult Nigerians get their primary source of income from their own businesses. So these are business owners. We have about 8 million adults who are working in the formal sector, and a large farming population, as well as individuals who earn salary from the informal sector. We're highlighting these numbers because over time, there's existing evidence to show that financial inclusion is more correlated with the male gender, with urbanization, with higher levels of education, with more formal sources of income. And so, just looking at what we have on our screen and our population gives us a sense of what our state of financial inclusion would look like. And also particularly the formality of income has significant implications for pension uptake. So we already see from slide 1 and from our context that we have a very high informal population. So we'll see how that plays out. So the next slide would just go dive into pension and financial inclusion. So in 2012, the CBN, alongside other regulators and key stakeholders in the financial sector, set the National Financial Inclusion Strategy target for 2020. And the key target was to ensure that by 2020, we have just about 20% financial exclusion for Nigerian adults. We also have, some sub-targets that were set, including 40% of adult Nigerians should by 2020 have access to, be contributing to or receiving pension from a regulated pension scheme. And we've disseminated some of these findings before now. Yes, we've seen consistent incremental increase in financial inclusion. For instance, for the very first time, we've been able to achieve 50% formal inclusion of the adult Nigerian population. And that's a significant increase of about 5 million people becoming formally included in the past 2 years. However, despite this increase, in inclusion, we've seen that it's still too slow for us to achieve the targets that's been set, whether at the general financial exclusion target or for the pension target. We had a target of 40% for pension, and the 2020 numbers kind of places the pension uptake currently at about 7% of the adult population. So this kind of discussion today really would be to kind of highlight what what the needs are of the Nigerian adult population, and how could pension meet those needs, what challenges are there in the sector, both from the demand and the supply side, as well as what opportunities exist for driving uptake. And EFINA's approach to this is, we do have a mandate to facilitate the emergence of an all-inclusive and growth-promoting financial system. And so we work with the theory of change that says, access to useful and affordable financial services, including pensions, helps people to take advantage of opportunities, manage their finances, to build resilience, build safety nets that they need to improve their livelihood. So we are constantly advocating for increased inclusion, financial inclusion. And today we're doing that with a focus on pension. We also recognize the macroeconomic importance of pension in mobilizing long-term funds for investment. So on the micro side, we are pushing this forward. So we'll just look at, situate this a little bit further. So when we're talking about pension, we do know, people have to save. Pension is kind of some form of savings. And so let's see how the Nigerian adult population are saving. It's interesting, and I think it's encouraging to see that 3 in 5 Nigerian adults are putting money aside. So we do have an adult population that they have an appetite to save. They do have a culture of saving. When we look at all the benchmarks that have been set, savings and payment seems to be the one that's have taken a kind of serious good start. So we do have Nigerian adults who are saving, they have a culture for saving, they have interest in saving. And we also see significant jump from 2018. But there's also the issue around where are people saving. We do see that about 19 million adults are saving either at home or carrying their savings with them. Obviously, that points to the amount of savings being saved, but then people are saving. We also see that in-kind saving is also increasing, and a lot of people are saving in other forms apart from cash. People are saving with banks, people are saving in other formal institutions as well. But the idea is to ensure that we have all forms of saving in the formal sector, or majority of savings in the informal sector. The next thing we look at is, what are people saving for? We do see that a lot of people are saving to meet consumption needs, but also it's also encouraging to see that people are also saving to meet developmental needs. And I think the question we try to ask here is, people are saving to meet things like education, to meet school fees or education needs, to expand their businesses, to build a house, or to buy a property. So these are already things that people are saving for. And when you compare that with savings for old age, you can see that savings for old age kind of falls below all of that. And so they were trying to advocate that probably increasing the use case for pension to meet some of these more developmental needs could encourage increased uptake. So if the average Nigerian is interested in his education, is interested in his business, and on a daily, weekly basis, he's putting money aside for those things, can we say to them, okay, a part of your pension, of that money, can be tied to your pension, or your pension can be used to meet some of those needs, and probably that could help us drive uptake. And we also see that people are saving with commercial banks. So people are familiar using commercial banks. Can we have bundled products that can, ensure that since they are already familiar with these channels, they can, access pensions just by linking accounts and all of that. So other things that we should put in mind is also the reason for selecting, a saving channel. Adult Nigerians want channels that are simple to use, channels that are close to them, convenient to access, channels that can ensure that they have quick access to their savings, and channels that are known and they trust. So as we come up with innovation and advocate for new ways to reach these people, we need to ask ourselves at every stage, simplicity, convenience, speed, trust and awareness should be at the back of our minds. Okay, we also see that, yes, we said that people are saving, but then when we ask people how do they intend to meet, to ensure that they have money to meet their needs when they are old and cannot work, we do see that a lot of people are relying on their savings, but also on things like their children and their businesses. And so this also points to us, it then makes sense when people are saying, I'm saving for my children for education or towards a business need. And I think tying all of this back to things that people are already believing is important for us. Yes, people are saving, but however, we see that just around 55% of adults who are below 55 are confident that they will meet their long-term goals. So people are saying, well, maybe we need to help them to save better or help them channel their savings to meet long-term goals. I think this is one of the things that we are also taking away from the findings as well. And now to where we are with regards to pensions, we see from the data that about 7% of Nigerian adults have pension, but very, I think this is a good number, the fact that we now have about 1.8 million micro pension holders in about 2 years. That's significant progress. And I think we can only just, get better from that. But we also see that 72% of them are males. So we mentioned that earlier on, that there's a gender bias towards this. So we need to advocate for pension for women as well. We see that majority of them own phones, have secondary education, are working in the formal sector. But I'm just going to run through this for the sake of time, and then highlight the challenges that we face, that we see currently hindering increased uptake of pension. Like I mentioned earlier on, we do know this, that we have a very high informal sector. And what we see is that 98% of individuals working in the informal sector are actually without pension. That's about 48.7 million persons. So just to put this in context so that we are on the same page, when we say informal sector here, we define this to include individuals who own their businesses or are trading in farming or non-farming products, individuals who provide a service, individuals who earn wages from the informal sector. And one key segment that's not here is the farming population, or individuals who actually rely on farming for their main source of income. And we more included that because we do think that the seasonality of their income would require a more strategic and direct kind of initiative or intervention or products to meet their specific needs. So we made a note of that to actually provide further insight subsequently to focus on farmers. But on this presentation, as when I speak to informal sector going forward, I want us to have that at the back of our mind, that we're speaking mainly to those who own business or trade or are trading or provide a service. That's the majority of the bulk of who we're speaking to here, and there's still a significant population who do not have pension. Majority of them earn their income daily or weekly, and also have about less than 5,000 naira per month. So that's the category of persons that we're speaking to. So for these individuals who, like the commissioner was speaking to earlier, we're focusing on people who are already earning income. They are actively earning income. So, and then the informal sector, majority of them, one challenge is that, like we said, they have the frequency of their income is daily or weekly. They have low income, but we also see that they're planning to rely on their savings or their children or their businesses for in retirement. So good thing is they are saving, but a lot of them are still relying on other things like their children and their businesses. So we need to be able to tie pension in a way that it helps them see how pension can help them build these mechanisms that they already see and they are currently relying on. So how can pension support this and strengthen these factors as well? Another challenge that we have, this is already clear from the first slide, is the issue around irregularity of income and also the size of income. Most people say, oh, I have irregular income, or I don't have enough money, so I'm not making contributions towards my retirement. But I mean, we do know that the micro pension guidelines already takes into consideration the issue of frequency of income. So even people who are earning, their salaries or earning income daily and weekly are covered. So it means that some of these challenges which people still speak to have been taken care of, and it might be an issue of them not being aware that these features exist for them. Another issue that we also see is the issue of trust or lack of belief in pension. And this stems from issues around people saying, I believe my money is safe with me, I'm not convinced I will get paid, or negative experiences. We have seen some progress in some of these factors, but generally the issue around belief still remains, or issue around trust still remains a critical factor that presents a barrier to uptake. And even when this slide speaks to some qualitative information we also got from our pre-survey findings. We spoke to individuals, and I mean, I think I spoke to this earlier on, low understanding of available services as well as lack of confidence stood out to us. The fact that people, even when the services are there, to suit their peculiarity, they are not aware, or they don't understand the fact that it actually can work for them. Number one. Then the second thing is issue around confidence. People having had negative experiences, or thinking that when they need this money, they won't be able to access it. So there's a lot that we can do to build confidence, not just by what's on paper, but by communicating it and disseminating it to the people who actually need these services. And another thing is also lack of awareness, which is also tied to what we've just spoken about. But one thing I want to mention here is lack of awareness of micro pension scheme. And we also see that even amongst those who have pension, the awareness of micro pension is very low. So this is like lost opportunity for marketing for us. So we have individuals in the formal sector who already have pension, and who already, in other words, I mean, majority of us do not just see this as a regulatory obligation. We do see the benefit of having pension, and can be tools or marketers to bring others on board. So we need to drive awareness of micro pension even amongst those who are already with pension. We also see issues around the distribution channel for micro pension. We do lack a wide variety of distribution channels. So how are we kind of distributing this? How are we increasing access to this? What's the distribution network that we put in place to drive micro pension? Across the financial sector, we've seen that financial service agents have become increasingly, kind of a strong tool for driving financial access in the past 2 years. And I think we should be pushing to ride on that as well, to do that. We also see that over 80% of those people in this segment have mobile phones. So could we also explore mobile networks in driving this forward? Another challenge we've also seen is the issue around gender disparity. I mentioned earlier, there's majority of individuals with pension, like we've seen, over 70% are males. So we need to tackle the issue around lack of pension for women. So I'm just going to run through this because we're running low on our time. There's another issue that we also need to highlight is the issue of financial capability. And here we are advocating for two things. One is for providers to be aware that compared to your typical pension holders, your typical formal target, the financial capability of non-pension holders is way lower than that. So you need to be You need to be aware of that while you're designing, while you're marketing and all of that. But also for the regulators to be aware that while we're driving innovation in terms of how we reach these persons, we must be aware about their financial capability and ensure that there's enough protection for, as we bring them in. Next slide, we also want to highlight the issue around the financial health of non-pension holders. We think that this is also significant because when you look at the financial health of pension holders versus non-pension holders, there's a huge difference there. And when we're talking about financial health, we're speaking to how well people are spending, saving, planning, and managing risk in a way that allow them to be resilient and pursue opportunities over time. So it just tells us that we want to be aware that beyond just getting people to take up micro pensions, there's a wider issue around their financial health, not just saving, planning, spending, managing risk is a challenge. So in having products and services that takes all of this into consideration will increase the value proposition of pension services. And lastly, on the challenge, we just want to also highlight other supply side challenges that are hindering micropension uptake. So there's obviously the cost of serving the low income population, and definitely individual providers might be ill-equipped to actually cover that cost. So maybe concerted efforts by stakeholders will probably be needed to tackle this. We have mentioned the issue around distribution channels earlier on, but then also issues around understanding of the potential market. And I think we need to identify and carry out more studies to understand this segment better. Quickly, I will also speak to the opportunities for action. So beyond these challenges, there are significant opportunities for action. For instance, we have over 28 million Nigerian adults are saving for old age. We just mentioned that about 7 million are saving with the regulated pension scheme. This leaves about 21 million adults who are currently, saving, making regular contributions for old age. But they're not doing this with the regulated pension scheme. How can we bring them on board? They are perfect fit for micro pension. They are saving daily or weekly. And so this is kind of a low-hanging fruit for us. Also, when we look at non-pension holders in the informal sector, they are saving. About 7 out of 10 have saved money in the past 12 months. I think it's very good to see that over half of them are banked. An additional 6% are, have or use other formal financial services. So they are not new to kind of formal financial services, and this is low-hanging fruit that we could leverage on through innovative approaches to targeting them. Also, we see that they are making regular, beyond saving, they are actually making regular contributions for retirement. And 68% of those who are making contributions for retirement are banked as well. So again, the issue around these people are already in the formal system, they are engaging with formal services, they are saving in a way that suits micro pension, is very evident in the data. The last thing here is also around how do we reach them. So we can see that technology actually presents an opportunity to reach this market. More than 90% of these individuals own a mobile phone. They are making digital payments. We can also see that 31% of them have financial service agents close to where they live. And then there are other non-traditional potential agent locations which they are familiar with. Remember, one of the things that they mentioned that, to help them decide is people that they are familiar with, also channels that are close to them. So these are options that we can explore. Finally, looking through all of this, just a few recommendations to start. I'm sure that from the panel discussion, we'll have some more detailed and specifics, but we are recommending that we increase the value proposition of pension to, expand the use cases to meet other developmental needs that we see that people are already engaged in and familiar with and are interested in, and then bundled services as well. We need concerted industry effort to leverage technology. We've said that the infrastructural and cost barriers are huge, so probably synergies need to be had to drive this forward. We also need regulation for innovation. We need providers who can actually serve this market, who are actually interested in serving this market, actually, that can come up with business models that will serve this specific target group and with solutions that can meet their needs as well. We also need to promote awareness and lastly explore non-traditional financial access points that can help us drive awareness and trust amongst this population. So with that, so thank you very much. I'll hand you over to TJ.
All right, thank you so much, Dr. Tomi. That was really insightful. We appreciate the research efforts on this, and we're hoping that this is the beginning of useful work that will be done in the pension industry. We're going to be moving quickly down the agenda, but before we move ahead, I would like to just mention again, if you have questions, I can see some more questions in the chat box, which is good. Our CEO has been helpful in answering some of them. Thank you so much, Ashley. If you have any more questions, kindly put it in the chat box and we'll be answering them simultaneously. And if there's some that we need to post to the panelists, we'll be able to do that during the panel discussion. All right, thank you again, Dr. Tomi. All right, so I'm going to be giving the floor to Gautam of Pinbox to make his presentation. Hi, Gautam, how are you doing? You're muted, Gautam.
Sorry. Good morning, everybody.
Hi.
It's wonderful to be here, and even though it's only in spirit, but I'm delighted to be in Nigeria this morning.
Great, fantastic. Over to you.
Thank you so much. Can I share my slides? Oh, I can. Great.
Yes, you can.
Thank you so much. Okay. Morning, everybody. Good morning to the EFINA team, and it's actually thanks to you that we got a chance to be in Nigeria a couple of years ago. And morning to Dr. Farooq Aminu. I think it's a pleasure to have heard the fact that you are making significant progress on a fairly difficult mission, and I really appreciate the insights that Tomi gave to the survey that EFINA has rolled out. And I think there are two things. One, I think the survey is filled with extremely rich insights, which I think PENCOM, the government, and the private sector, and the industry more generally should be able to use to be able to introspect and think about what is it that could be done and what could be done differently if we want to actually scale up coverage. But what was also interesting and striking was that a lot of the data and insights that were shared by EFINA seem to, if I replace the country title to say Kenya or Uganda or Rwanda or India, a lot of those numbers and a lot of the feedback that we've got from the trenches would have seemed very, very similar. So I think the interesting thing that I found in the survey was not only the incredibly valuable data that has been gathered by EFINA, but also how similar the challenges really are and how similar the problems are. And I guess similar, to a certain extent, and maybe replicable, some of the solutions are. So what I'll do this morning is to, though I think I have a problem with brevity, but I will try and restrict myself to 20 minutes. And the good thing is that nobody can kick me under the table remotely, but maybe somebody can ping me if I'm running over time. So let me, without ado, let me just briefly introduce. So Pinbox is a Singapore-based social enterprise. We've been working in this area as a team for about 25 years, but more recently, we've been working in about a dozen countries specifically on digital micropension inclusion. And we are very lucky to be working with several governments and key stakeholders. And we've done a fair amount of work with FSD in different countries as well, both in Rwanda and in Uganda. And it's great to be interacting with EFINA on Nigeria. So we looked at some of the data that we got. Let me just, shift this. Yeah. So some of the data that I saw, some of the things that looked interesting was the fact that we're talking about a very young country, and I think that's incredibly useful, because that just means that with a median age of 18 years and with a large number of people who are still below the age of 30 or 35, clearly a lot of people in Nigeria still have many decades to go before they're old, and therefore by saving even small amounts of money, if we can motivate them to even put aside a few naira a day or a few naira a week, I think there is a good chance that a lot of them will be non-poor when they're old. The trick, of course, is to do this at scale. On the other side, what we find is that the population of elderly is fairly large, and Nigeria in the next 20-30 years is going to be probably one of the most populated countries in the world. And clearly you would have a fairly large population of elderly as well. And I think that is something that needs to be considered seriously. At the level of labor markets, again, not very different from many other developing countries. The number of people with employment contracts and working in the formal sector in either public or private sector seems to be fairly small. And therefore, since pension coverage efforts in the past have really focused on occupational pensions and employer-driven pensions, it's not surprising that a majority of the workforce which is participating in pension schemes is from the salaried sector. And it's not surprising also that the vast majority of informal workers today don't really have pensions. Incomes is a challenge. And I think regardless, I think there will always be a situation where there will never be a perfect solution which works for everybody in the economy. There will always be a population which is perhaps below the poverty line and will be too vulnerable to be able to save. But I think that should not prevent efforts to get at least people who are still young and have some savings capacity to encourage thrift and self-help from those populations. And I think currently what we are seeing is at the level of behavior, and as the survey has also shown, there is a fairly interesting, formal financial sector attachment. And a fairly large number of people already are working with banks or capital market intermediaries and others. And there seems to be a fair amount of utilization of formal finance. But what was interesting was what we found towards the end of the survey results, which was, why are people doing what they're doing with their money in terms of who are they? Why is it making sense to say save predominantly with commercial banks? Or why are a substantial number of people, 1 in 6 people, keeping money at home? And clearly, as Tumi just said, I mean, a large number felt that ease and simplicity is one important thing. Liquidity seems to be an important consideration. Convenient access and trust. And I think these are very important because they're not only important for general financial services, but equally important issues from a pensions perspective. And when we look at digital inclusion, I think Nigeria has made a lot of progress. I mean, you've got an incredibly large number. I mean, mobile penetration is almost universal. Internet use is very high. Number of people doing social media, using WhatsApp and Facebook, etc., is extremely high. Key challenges that we see really are around the traction on digital payments. And when I say digital, I mean mobile payments is still low, though it has increased significantly from what we saw a couple of years ago. And the inflation levels are reasonably high. And I think these are things to sort of keep in mind when we're thinking about motivating people to save, and to perhaps it becomes important to then think of ways on how people can inflation index contributions to make sure that the real value of their savings are not getting eroded by inflation over a period of time. So if I look at, if we look at it from the outside, what we are really seeing is Nigeria is faced with what I would call a multi-billion-dollar, crisis and a new market opportunity simultaneously. So one, the crisis really is because of the first two boxes, which is you have a very large workforce, which is excluded from pensions and is marching towards old age with, virtually zero long-term savings in their pockets. The projected number of elderly in as per the UN by 2050 is going to be in the ballpark of about 24 million who will not, if things continue as they are, who will not have any pension benefits and will be poor. And the cost of providing even say a pension benefit which is equal to the minimum wage in Nigeria today could be $21 billion a year. And I think that's not only substantial, I'm sure, as a percentage of tax revenues in Nigeria, but also is going to be at the cost of other essential public expenditure on health and infrastructure, education, and so on and so forth. So clearly, waiting for the current young cohort to become old and destitute doesn't seem to be the right way to think about it. On the flip side, if we could get people to start saving even say 50 naira a day, and if there was a 25-year-old person who did that, and if I look at the kind of returns that we're getting even in banks today in Nigeria, a person could end up with about 50 to 60,000 naira of a inflation indexed monthly pension for about 20 years starting age 60. So clearly it does seem to make sense. One, if we didn't do something, I think the cost is very high. But if we did do something and get it right for at least some part of the population, I think this can have non-trivial and fairly meaningful outcomes. And if we did this at an industry level, I think we could look at, I was hearing Dr. Farooq, and I'm saying even if we looked at 50% of the, let's say, the target that PENCOM had, and even if 10% of the currently excluded workers start saving, say, 15 naira a day, you could end up with $8 to $10 billion of new long-term savings, which again flow back to the economy and help in various things. One important thing that Tumi mentioned in her survey findings was about women, and I think this is a really serious problem. Women typically are better savers than men, but they clearly, and this is not a Nigeria thing, it's all over the world, they're much more vulnerable than men to old age poverty. And they need more money in old age because of longer life expectancy, and therefore, because of which they outlive men and live, alone for a substantial part of their old age. But on the other side, though they need more savings when they're going to be old, they're not able to accumulate enough savings. Besides all of these points about informal employment or, the fact that women earn less than men and, face income interruption. So if there is somebody unwell in the house, or if I have little children, and if I'm the woman in the household, then there's a good chance that I will be taking off from work and my husband will not. So I think some of these things are important, but also I think women end up being a substantial part of the unpaid workforce in most developing countries. And I think a contribution, a sort of a pension scheme, which is largely or predominantly based on contributions and thrift, is unlikely to therefore benefit a majority of the women in any country. And I think, therefore, we need to look at pensions from a gender lens with much more seriousness, whether it is on communications or products, benefits design, and so on and so forth. Now, as things stand, based on what we're seeing from the survey, I think the glass is more than half full. And I think Nigeria has already built a substantial part of the building blocks of the ecosystem that is required for comprehensive pension and social security inclusion. In addition to the fact that I think PENCOM is the only regulator that I know of which has a significant and extremely charged micro pension department. I haven't seen a dedicated micro pension department in any country, and we're working in about a dozen countries today. And I think that's a huge thing. So there's clearly, and the micro pension scheme was launched by the president. The fact that it clearly demonstrates that there is a lot of policy, political, and regulatory commitment to make this work. And then you have all the ecosystem pieces with, mobiles and, a large population and so on and so forth. But despite everything, clearly, based on the numbers that Dr. Aminu shared, it doesn't seem to be easy and simple for people in Nigeria to set up and manage retirement savings or to start saving for their retirement. Now, typically what we are seeing, and some of this might resonate, and then let me now move out of Nigeria for a bit and talk a little about what we are observing in other countries, is why is it that, what is preventing countries typically is, one of the things is that most pension systems have really been built for salaried formal sector workers, and the technology around pensions is all really for delivering mandatory benefits to salaried workers through occupational plans. And I think using the same tech for micro pensions typically is difficult. And so if people use the same technology, it sort of limits their ability to do significant outreach because of IT limitations. But on the other side, building proprietary micro pension platforms become extremely expensive, both in terms of time, capital costs, and what I would call mistakes in design. Sorry. Now, one of the things that we are also seeing is that when a standalone pension provider is there of the kinds, let's say a PFA in Nigeria or similar entities in Ghana or in Uganda, what we are seeing typically is two other things. One is the operating costs are so high in micro pensions, but the revenue potential from micro pensions is low. And typically individual firms struggle to pump in enough budgets for generic promotions, awareness, financial literacy, etc. And typically what we are seeing is that if I'm a PFA, I don't think I have the necessary incentives to use private capital to build public goods. And financial literacy is like a public good. And so if there are, let's say I am there and Parul is there, and we're both running PFAs simultaneously. And if I'm the guy who puts in a few $1 million into creating awareness, generic awareness about retirement and micro pensions, I would worry that Parul's firm would also benefit from the efforts that I'm doing. And so therefore, private firms may not have enough incentives. And I think there is a role for governments to step forward and do some more work on building public goods using public funds, which is in the form of generic awareness. And the second, I think, is on the flip side, if you have a number of individual standalone service providers, we've seen the problem then becomes that you end up with very non-uniform governance, service quality, retirement outcomes. And I or anybody else in the country, it's just a luck of the draw. Depending on which PFA I have selected at some point in time. And me and my neighbor could both be saving for retirement with different PFAs, and we could end up with very different retirement quality, service quality and retirement outcomes. And there would normally be some level of constraints in moving across product providers. So on the supply side, there are some constraints. On the demand side, we are seeing broadly 5 things. One is that though the ecosystem exists, as it probably does in Nigeria as well, typically the ecosystem is fragmented. And there is no, like we just said, there's no easy way for most people to save for old age. And one of the key reasons is commercial viability, which is the agent-led model for selling pensions or insurance to, which are micro pensions, let's say with small ticket sizes and so on and so forth. The commercial incentives are not big enough to incentivize the traditional agent networks. And agents, therefore, are just not interested in going out and selling pensions and insurance and social security products to the poor. And I think in this case, there is a possibility to use technology for demand aggregation and to work with cooperatives and banks and MSMEs and other fintechs and gig platforms and others. A second reason why people find it difficult is there is usually a lot of friction. The process of opening, like in India, to open a pension account, I need to fill up a 6-page application form in English. Now, and India doesn't, not everybody in India talks in English. And we have 14 regional languages in addition to English and Hindi. And unfortunately, the language of the application forms are in English. So it sort of creates, that itself is a big barrier. And then if you have complicated KYC processes and so on and so forth, it then starts preventing voluntary participation. And because of that, it also lowers public confidence. It tends to increase transaction costs, because if I'm the agent and I have to sit with somebody, say sit with Tomi and get her to enroll for a pension scheme, I have to first fill up a 6-page application form. I will then expect to be remunerated accordingly, because it will take me an hour to complete the onboarding. Why should it not take Tomi 2 minutes using her mobile to open a pension account? And I think there it is feasible to use existing public platforms. And I'll give you a couple of examples as we move along. The fourth reason is affordability. And affordability is, the reasons are twofold. One, informal workers, like we've seen in the survey as well, they're not earning monthly incomes. They're earning either seasonal incomes, or a majority, about 75% of them are on daily wages or weekly wages. So and if you're on daily wages, you can't save large amounts every day or every week. So we need systems, as Dr. Farooq said, that we need systems or mechanisms where people can save very tiny amounts in line with their own income. So if I'm an Uber driver, don't force me to save $20 or $30 a month. Why can't I just save $1 a day, because I earn some income every day? And the moment I can do that, then $30 might have seemed to be too much to me, but $1 a day seems fine for me. And then what you're actually doing is suddenly getting $30 from the Uber driver, but making pensions more affordable, making that $30 contribution more affordable by linking it to incomes. The second thing that we find is a lot of people find it difficult to accumulate long-term savings, and don't like the idea of a lock-in or the illiquidity in pensions because of the fact that they don't have insurances. So, and because they're not insured, they end up using past savings or expensive emergency loans to cover the full cost of every insurable life cycle risk. If I have an accident, my child is unwell, my cow at home in my village has died, or my crop has failed, all of these are insurable risks. But if I don't have insurance, every time a risk occurs, I end up using my savings, which depletes all my savings at that point in time. And if my savings are not enough to pay the full cost of the risk, I get a loan, then I'm mortgaging the surplus future income that I would get. And therefore, that lands me in a situation where I get into this perpetual cycle. I save some money, I face a risk, I exhaust my savings, mortgage future income, which is surplus income, again start saving, again fall into this. So it's really a terrible trap. And I think it's very easy to solve this by integrating savings with, retirement savings with either liquid savings for emergencies and or some insurance products which take care of the risk. So you end up in a situation by adding insurance and making, let's say, contributions possible in line with inflation, with incomes, you suddenly make the entire process much more affordable. And the last, of course, something that we've heard throughout this survey report is low financial literacy and low awareness and so on and so forth. And I think this has a big impact, not only on people opening accounts, but on persistency. And I think there are two things that could be done. One is, of course, that we could look at how we can work with trusted outreach partners. So I might, let's say, if I was one of the PFAs and the guys in some village don't know me, can I work with a cooperative which is already working with the villagers? Can I work with a producer company, a farm producer company, which is already working with those? And therefore, can the communication be done by trusted field agencies who people trust, and some of that trust? And can these trusted agencies be the face of the pension? The second thing that we found is, when we think of financial literacy or retirement literacy, let's not try and think of the informal sector as a homogeneous mass. Let's try and think of more targeted or segmented communication. So if you launched a pension program, let's say saying pensions for farmers, suddenly the farmers might sit up and say, hey, listen, this seems to be a scheme for farmer guys, or a social security for border drivers, or something for pensions for nurses. So you might find that people, these occupations resonate with them. People in the informal sector don't think they're in the informal sector. They're a Uber driver, or they're a mechanic, or they're a farmer, or they're a teacher, or they're in some occupation. And that's a good way to think. And we've seen that working. What we are doing is, in some of the countries that we are working in, and we're working currently in 3 countries in East Africa, and recently in India as well. This is the way we do it, and it may or may not resonate, but we think about micro pensions being based on shared infrastructure. So there are certain things that a pension fund need not, or a PFA need not spend money on, because that infrastructure could be like a public good. So for instance, technology need not be something that each PFA needs to build on their own. So what we've done in say, and Rwanda has done this, and they did this about about 3 years ago, and they've already got 1.5 million people in their pension scheme based on exactly the same approach and the architecture. There's a centralized platform. It's linked through secure APIs with the national ID for eKYC, with pension funds, with insurers, the custody bank, payment gateways, and so on and so forth. None of these guys need to then build the technology. At the front end, any individual in the country is able to use any device to access this platform, which then becomes like a marketplace, and to open a pension account within a few minutes. In Rwanda, you can use USSD to open this account in under 2 minutes. In Kenya, the same thing. In India, you can use the same thing. We've now gone into a global partnership with WhatsApp, and now you can even use WhatsApp to open your pension account. And like there are 30 million people who use WhatsApp in Nigeria. So, and I'm sure they also use USSD. Once the account is open, then they use any digital payment instrument or wallet to regularly put money, whatever money they want, in line with their incomes. And there is a national helpline which is available to help and assist or provide information. At the back end, this tech is provided on a plug and play basis to a variety of aggregators or field partners who don't have to again invest in technology. So what this does is, over here, these people do the work of educating their constituency and encouraging them to open pension accounts. The process of opening pension accounts is very simple. It takes 2 minutes to open an account from anywhere. It takes 0 time to, let's say in Kenya, you can use M-Pesa or whatever to put money into your pension account. And therefore, if it's simple and it's easy, the cost of financial literacy and education also reduces dramatically. And like I was just saying, so Rwanda has done this. They've got about 1.5 million subscribers, which is 25% of the total eligible population. They have about 6 million adults. Kenya is doing this. India, we've just launched this, and Uganda is in the process of rolling out a program like this. I have 2 slides left. I'm sure I have overshot my time and not lived up to my promise. But let me just play you a short video about how, again, technology can be used. And this is a model that we are using in multiple countries, including Kenya and in India, to deliver a digital pension scheme to domestic workers. So to cooks and nannies and security guards and drivers and so on and so forth who work in different households. Let me just play this. It's just a 2-minute video.
This is Shanta. She's 22 years old. She lives in a little village far away with her husband and 3 children. But her family finds it tough to make ends meet. So Shanta decides to migrate to your city in search of work. You employ Shanta as your maid. She works long hours. She takes care of your children. She cooks you meals and keeps your house clean. She sends most of her income back home to support her family, to put food on their table, and to send her children to school so they may have a better life than hers. She does this year after year after year. When she's too old to work, Shanta returns home to her little village. Her children are now grown up. They're educated and married, but have migrated to the cities. Shanta and her husband now live alone. But with no savings of their own, they struggle to make ends meet. They live without dignity and will live this way for the rest of their lives. But does it really have to be this way? Let's see this again. You employ Shanta as your maid. You talk to her about the importance of setting aside a small part of her income for her old age. Then you spend just 5 minutes on WhatsApp to help Shanta open her own pension account. And you get her started by regularly putting some money into this account for her old age. These savings will be managed by the likes of HDFC Pension and SBI AMC and will grow over the years. When she is too old to work, Shanta will return home to her little village. She and her husband will still live alone, but they won't struggle to make ends meet. Thanks to you, they will now get a monthly pension and will live with dignity for the rest of their lives. This could be the story of your maid, your driver, your gardener, or guard. Just 5 minutes of your time can change 20 years of Shanta's life. You can be that change. Gift Shanta a pension account today. Her clock is already ticking.
Okay, so this is my last slide. Can I, ma'am, do I have your indulgence to just tell you a 1-2 minute story about this goat? And yeah.
All right, that's fine.
Okay, so basically what we're finding is, if you can, I think if we get the product right, if we get the communications right, and if we get the process to be simple and easy, I think a lot of the stuff will intuitively start working, and in many cases it will become very counterintuitive. So this is a story of a pension goat. So we were analyzing some data from India, and we went and met, there was a lady called Saira Banu, and we found two things when we were assessing how she was saving. And we found two things. One, she was saving regularly for old age. The second, interestingly, she was inflation indexing her savings, though nobody had told her that she should inflation index her savings. So we actually went and met her and said, Sarabhen, tell us why and how are you managing? You seem to be fairly, not non-rich, but how are you saving regularly for your retirement? And she said, Gautam bhai, what I do is I run a small goat farm, and every year I nominate or designate one goat as my pension goat. And then I go to the market on Eid and actually sell that pension goat in the market. And whatever proceeds I get from that pension goat sale, I put into my pension account. And we said, okay, this is absolutely fantastic. And we had never thought of trying to educate Saira Banu about how goats can be used to save for old age. But clearly we had got some message right. And clearly she had understood it in her own way. And then we said, by the way, but how are you inflation indexing your savings? I mean, who told you about that? She says, actually, that's not me. That's the goat again. Because you see, last year when I sold the goat, it sold for 3,000 rupees. This year, it sold for 3,600 rupees. Next year, I'm sure it'll sell for 4,200 rupees. So the inflation indexation is actually built into my goat. And I think that's exactly my point. It can actually work. I think if the people on this meeting, the level of commitment I see, I think, and the level of thinking that is feasible, some conversations I've had with Tunji, who's on this call as well. I think there is a lot of interest and enthusiasm. And I think people who work in micro pensions like me have no option but to be diehard optimists. And I think some of this is bearing true. Thank you all. Thank you for making the time. And thanks for your indulgence for giving me extra time.
Thank you very much, Gautam. That was brilliant and insightful. I learned quite a lot, and I'm sure members of this webinar has learned a lot as well. Really good insight. Thank you so much, and thanks for your passion as well. All right, we'll be moving quite along in this agenda, and I'll be giving the floor to Ashley Manuel, who will be moderating the panel discussion. If you have questions, kindly put them in the chat box. I'm seeing some questions already. Thank you so much for dropping those. We'll be addressing them at this time, or a member of the team will be putting in the answers right along the question in the chat, the Q&A chat box. So thank you. Over to you, Ashley.
All right, thanks a lot. Thank you very much, Gautam. I think that was a really fascinating presentation. I'm making note of some of the data points you shared around market potential in particular. But thanks, I really enjoyed it. And I think also this is the first time we've had a guest speaker ask for a few extra minutes to tell us about a goat. So I think I'll remember that story as well. So thanks very much. And I know your colleague will be sticking with us for the panel discussion, which is great. So thanks. We'll jump into the panel. We've got a really kind of rich set of panelists, and so I want to make sure we have time to listen to their insights. So now we have Dr. Farouk, who presented the DG's remarks earlier on behalf of PenCom, will be staying with us on the panel, which is great. Dr. Farouk, I know you have to leave, I believe, a few minutes before 1, so we may see him excuse himself a bit early, but is with us now. So welcome, or welcome back, I should say. We also have several other esteemed panelists with us today. So we have Oguche Aguda, who is the CEO of the Pension Fund Operators Association of Nigeria. And as I mentioned, actually, it was a chat with Oguche that sort of inspired us to do some of this analysis. So I'm just, I see Oguche's on the line. Oguche, welcome, and good to see you again virtually. Hi. We've got Laura. Thanks, Oguche. We also have Laura Llewellyn-Jones, who is an actuarial consultant and a director at Callan Consulting Limited, who has experience in multiple markets, but also has experience working with the pension sector in Nigeria, and is now back with us, based in Nigeria again. So welcome, Laura.
Thank you. Thank you.
Thanks. And then we have Gautam's colleague, Parul Khanna, from co-founder and director at Pinbox Solutions, who will also be joining us in our panel discussion as well. So welcome to you as well, Parul. All right, so I think we'll jump straight into the discussion then. I'm going to start a little bit open-ended. And then in the course of this conversation, I'd like to unpack a little bit more a few things, but what we can do, sort of how pension operators are really thinking about the market and how they can capture the market opportunity. I'd like to talk a little bit about the enabling environment. So things like regulation, but also some of the other kind of broader factors that have been mentioned, like KYC, infrastructure, and so forth. And then talk about some opportunity for partnerships, innovation, and hopefully in the course of this discussion, draw out a few actionable insights that we can take away in terms of next steps for driving more inclusive access to retirement services here. So I think, Laura, maybe we'll start with you. We've seen that the current uptake of pensions in Nigeria is about 7% of adults. 7% of Nigerian adults have a pension account. What do you think is the opportunity for the pension market in Nigeria? And what do you think are some of the key actions necessary to start to achieve this potential?
Thank you, Ashley. Well, the coverage is obviously low in Nigeria, and Nigeria is a very populous country, so there's lots of opportunity. I think in order to expand coverage, I think the work that PenCon has been doing is definitely in the right direction. It's ambitious with large coverage, which is the way I think it should be. What I think we need to see is the barriers for entry into pension being reduced, so making the process as easy as possible, and digital is obviously part of that, I think, part of the solution. And there's lots of things happening in Nigeria as well. So we've seen the national ID, the NINs have become a much bigger part of life here in Nigeria. And there was announcements, I think last week with MTN and Airtel. So they've been given approval now in principle to start mobile money. So I think that's an interesting space to watch as well. So I think it will grow, and I think it will change over time as the landscape changes, but there's a lot of opportunity here. Okay, thank you.
Thanks a lot, Laura. So for Oguche, if we switch to the provider side, given your sort of engagement with providers across the pension sector, how do you think Nigerian providers are thinking about micropension?
Yeah, so I think they look at it from two sides. Most of them see it as a new growth frontier, because obviously with the formal sector being a bit saturated. They think that's the new, and there are all statistics about 65 million people in the formal sector. So that number seems large, and it seems like that's where the market is. However, in terms of the fee structure, in terms of how much money those people have to save, on the other flip side, some people look at it and say, you know, it's a loss-making industry. And in fact, over the last 1 or 2 weeks, most of the operators I spoke with said from their projections, it's going to take between 7 and 10 years to break even. So from a business point of view, you wonder, you know, do I need to make investments in that, even though statistically shows that that's a new growth frontier? So it's a bit of an iffy sector in terms of they see the numbers, but in terms of being able to get value from a shareholder point of view and a business point of view, it now becomes an issue and somewhere that people need to think strategically about.
Thanks. That's really interesting. The 7 to 10 years I can imagine that's a projection that would give people some pause, right? It's a serious investment. I think that actually is sort of an interesting question. If we look at, given some of the insights that Pinbox was just sharing around sort of what's happening globally and the opportunities for digitizing. Parul, I'd be interested in your perspective around, are there ways to make the business case more attractive, either through digital or kind of other innovations around the model?
Thank you so much, Ashley, and a pleasure to meet everyone here. Dear friend, Dr. Farooq, wonderful to see you yet again. I think I would actually break it down into a few parts. I think what is important is to understand your customer. So like Gautam was also saying, you know, they're not a homogeneous group. When we say informal sector workers, or we say the term poor, which I personally don't like, you know, there are people who are in the lower income group, middle income group, higher income group, even within this informal sector workforce. And I think that that needs to be broken down, and how you slice and dice that occupation in terms of outreach is also very important. So I would say people who earn less than a certain amount, and I'm not able to give a number that is in a currency that everybody can understand. I think those are dissavers for life, where the governments need to take care of them. But then there are these other people in each. So if you look at occupation wise, you will find gig workers, domestic workers, some farmers who have potential, SMEs, MSMEs, right? So all of them are able to potentially save, but then it's also a question of whether their interim needs are taken care of or not. But I think the flip side is, at least in India, the pandemic showed that people didn't have savings even for 3 months, and they marched home from cities to villages because they couldn't sustain for three months, and it's going to be permanent in 25. I mean, after retirement, 20 years is going to be a permanent situation where there is no income. So I think that's the one way that how you approach. The second way is, and sorry, even just one more point on the approach. I think while we are thinking of these occupations also, the customization and jacketing of whatever product you have at the back end has to be in tune with the people who you meet at the front end. So if you say gig workers, make sure there is a buy-in from either the HR organizations who work for them or hire them, or the companies like Zomato or Uber who hire them as gig workers to approach them. Similarly, is there a way to engage with FPOs, or farmer producing organizations, where you get them as an aggregated cohort, get a buy-in with them? It has to be a direct to customer for sure, but there's also a lot of potential in B2B2C because of education and other frictions that tend to be very expensive outside giving a technology. So to Aguche's point on, technology is a way that you can do it. Technology is an enabler. And I think Tunchi will agree with me that you can get the beautiful technology and you have a beautiful egg, but as long as it's not reached, people can't feel that they can touch it or have access to it and be serviced by it. There is no point in creating this beauty. I can tell you that. On the second point, I think it's very important to get the product right. Because if your product is right, not only in terms of design and features and giving the right kind of returns, I think a product which is every market allows you to design products according to the regulations that they have. For instance, in India, in typical pension products, you cannot have 100% withdrawal, it's only phased. But Kenya allows you to withdraw your money and allows you to have a 4% guaranteed return. So I think whatever the people want, and it's easy to explain. It should not be, you're going to get exit load at 5% and you're going to get market linked at LC 75. And when I'm saying this also, I'm thinking maybe I should explain this better, right? So if it's not going to be easy, it's not going to sell. The third part is, of course, the golden egg, which is the technology. Has to be intuitive. It can be as complicated at the back end as you want to make it. At the front end, it has to be as simple as ever. And even, but also we also need to understand that for a lot of people, access to technology is usually a green button or a red button or maybe an orange button. It isn't any other interaction. There are no typing or there's no, anything that I understand is literally on a few clicks. And the last point, which I wanted to actually say in terms of creating better business models, in pensions or any financial services, I think the relatively easier part is to open accounts. It is to get people to save regularly is what is really tough. And those regular savings actually being meaningful. One of the ways that you achieve it is by good servicing. So pretty much like every person on this webinar today has financial services, but all of us can touch and feel our money. When I want to know my balance, when I want to withdraw, when I want to know the value, if I want to change a password or something, I call up the helpline and say, and I can use a computer. I run a tech company, for God's sake. Yet I will say, can you please stay on the line, ma'am, look left of screen, click that button, there's a blue. I become completely illiterate because it is my financial services. So I think that's the same quality of services you need to give to that person as well. I assure you, if there is a withdrawal function, they will first withdraw to see whether the water runs through the plumbing or not. And if you deliver on your promise is when you get sticky customers. And that's when the business models win, because without taking too much time, sorry, I've already taken too much time. I think the value of the savings increases over a period of time, and servicing and adding more products, which are not too complicated, not too many either, is a way that business models can sustain.
Thanks so much. That's really insightful. It's funny. I see Tunji smiling because he and I were I'm remembering, Tunji, we talked about this question on being able to have instant access to account balances, right? when you have micro pension accounts. Absolutely. If I put my money somewhere and somebody tells me they don't know how much money there is.
You'll know your balance in T+1, no problem. But if you don't deliver in T+1, that is when the problem is, you know? So we are able to give balances and all that in real time, everything. You can even click a button and get your balance back. Right. So all of that happens. But if I don't deliver, that's it.
Absolutely. Absolutely. And I think, and maybe I want to come back to some more topics on communication and trust building a little later in this discussion. But before I do that, Tunji, I wanted to come to you also on this question around building business models that are profitable, and how, so to kind of thinking about the 7 to 10 year trajectory that Oguche was saying, and some of the reflection, maybe the pause that's given some of the pension providers, and then also thinking about some of these points that Brill just raised around customer-centric design, getting the product right, using technology effectively, and so forth. Tunji, I'd be curious what your opinion is around how we can innovate in that space, and also partner effectively.
Morning. Thank you for having me. Great to see everybody here. So there are three things that drive our cause for innovation in this space, especially because, I mean, it must be clear that we are not a PFA. What we do is basically help the PFAs onboard customers onto the system. And in doing that, we've discovered a few things. And I think there are three things anybody that is coming into this space to innovate and help will have to understand to be able to make it mean sense in terms of profitability. Because I mean, every business must be a profitable entity. And as Oguchi was talking about the 7-year horizon, I think it can be done a lot quicker, but you have to be able to understand everything. Now, there are three things we had to see. The first is to understand the spirit of the regulation that backs micropensions. That is in understanding the reason why PenCom created it. So one of the things we first did was sat down with the regulation, and we had to understand the fee structure. We had to understand why the regulator was very specific about how the fees were towards the customer. It just was clear what the vision of the regulator in that space. And I mean, you have to understand that before you start putting your money into it. The second, of course, is understanding the customer. You know, what micropensions, let me explain what micropension, because I think we need to hear it back to ourselves, right? It is going to meet the person on the street and say, give me your money every day, every week, every month for the next 30 years. Then I will give it back to you. It just sounds very ludicrous to the person on the street, because I mean, how do I know you're going to be here in 30 years? And the third part is understanding why the people in the rural communities in Nigeria do not trust the big banks in Nigeria, but then they trust that guy who is, in Nigeria, we call the guy the Alajo. He comes with a bag, he comes with a notebook, he goes around taking money from everybody. How come they trust that guy and they don't trust the banks? It's because the guy, they went to school with the guy, they were the guy's name on the ceremony, they all grew down the streets from each other, they know themselves. So the issue really is around building trust with this community. So one of the things that we've decided to do is that we realize that technology can't be the starting point. We have to build community before, then we build technology around that community, because you can't build technology for the community. You do not know what the community wants. So one of the things that we found interesting is that, Dr. Aminu was talking about, how, using trade bodies and artisan communities to be able to get across to people. The greatest part is most people go to the artisan community and try to speak to the artisan community. One of the things we've done is get somebody within the artisan community to speak to the artisan community on our behalf as an agent for the pension fund administrator, because they know their nuances, they know their fears, they know their reservations about saving long term, and they know the nuances and the growth aspirations of these people and know how to speak to them better. So the general idea is that innovation itself must be built for purpose. We call it in Awaba, for us by us. It must be for the people. We must speak like the people we're talking to. We must look like the people we're talking to. We must have the same fears of the people we're talking to. So in that, and it's been great, because the PFAs have been very, at least the ones we try to help have been very forward-facing in this conversation. Now we just come at the back with some of the technology to be able to help the onboarding process work a little bit better. I think it can be a lot quicker in terms of signing up, because what we've seen that a lot of the churn happens when we're signing up customers. They're about 5 pages or 3 pages they need to sign up. And as Gautam was talking about, a lot of them don't speak English. So it can be a bit of a hassle, but I think the beginning point for any innovation must start from the desire and the passion to see this work. If you are not passionate about inclusion, if you're not passionate about micropensions, you will not succeed at this. This is not even, I'm not even trying to joke. So it must start from that point. And I think innovation will be built behind everything else. Thank you very much.
Thanks very much, Tunji. Dr. Farouk, I want to come to you before you need to drop off. I know that at the beginning, when you were sharing the DG's remarks, you spoke quite eloquently about some of the important steps that PenCom has taken to improve access to pension in Nigeria, including through the deployment of the micro-pension regulations. I'm curious what you think are really the priority next steps for us to take in order to drive further pension uptake in Nigeria. And this can be next steps for the regulator, for the providers, for others in the ecosystem.
Oh, well, we have really worked so hard from 2004 to date, and coming up with the macro pension regulations is also another really huge task, but indeed a milestone. We are aware that we have made a lot of very nice provisions in the guidelines to drive macro pension, and indeed having implemented the pension reform for about 17 years, we have understood to some level of confidence that what is the problems and the challenges are, and we have been trying to see how we can address those. Now, I will tell you, most of the issues that we see in the main pension, the issue of really lack of clean and robust database. Today, if you look at the provision of the law, that all institutions with 3 employees and above must implement the contributory pension scheme. Where in Nigeria would you go and get a database of such employers of labor? It's not available. So this is really a key challenge, not only for the pension industry, but indeed for planning purposes nationwide. So this is one of the major issues. And then, the backup technology now to help us access that database, it is data mining, analyzing this database and making some meaning out of it. These things, are missing. Now, the pension reform came and asked people to contribute. People are forced to do it. People are not really, at the very beginning, willing to do this. And indeed, when you talk to employers of labor, this was the law says, they see the pension contribution as a burden, additional operational cost. Why should I be paying this employer contribution, while I can use the money to do something else, maybe improve my production and so on. So, but the major issue is that when you have these challenges and then some delays in paying accrued benefits for those who are not in Nigeria, this pension and gratuity benefits based on the old scheme. So just like the transfer values from the defunct defined benefit into the defined contribution scheme. When you get delays and people are really not paid in time because these accrued benefits are not paid, then you get this effect that when you try to sell the macro pension, people say, okay, even those on the main scheme, they're still like this long time waiting to be paid their benefits. How am I sure that I'm going to get my benefits in good time? So these are things that we need to improve. I'm not saying we're sitting, we're doing a lot, and the government has really done so much and showed a lot of commitment and given a lot of money. But I believe that if we resolve all these issues, we'll have a smooth sailing on the issue of selling the pension as a whole, and then macro pension in particular. Now, when you come to the macro pension issue, I still believe that the operators need to show a little bit more commitment on this. We are trying to change the culture of our people. People who are used to what one of the speakers here mentioned, that are used to this guy who is coming with his backpack and with his notebook and collecting and so on. And this has really been fully developed over centuries. And you are trying to compete with that. So you have to really have the mindset and the commitment to compete. Because if you are not really there to compete with them, you can hardly beat them. People don't care about they have this technology. But the fact that this guy will come home, collect, which is easy, I don't have to go anywhere. He is coming and I trust him, I know him. So I give him my money and my money is safe, and whenever I need the money, I get it back and so on. or whatever Sharon ratio or Sharon formula is agreed upon, this guy executes with perfection and full commitment. So I think operators need to also, put themselves to that level. They have to be ready to compete. I agree that, you commit money, that you need to get money back. But that's when you look at the efficiency aspect of business. I always say this, when you look at the efficiency, I look at how quickly can you recover the money you invested. And then perhaps when you break even, you don't want to say, you minimize costs and you maximize profits. That's the thinking. But at the beginning of this business, we have to really give more priority to effectiveness. We are trying to build something. And forgetting this effectiveness issue could actually lead to some existential problems. When computing came to banking, to the banking industry in Nigeria, some of the big banks refused to actually implement that. So the new generation banks that came with their computing, and today they are the big banks in the country. And in fact, some of the big banks are actually out or perhaps about to be out. So one of them just is surviving because of special intervention of the Central Bank of Nigeria. So whenever there is something, you need to show that commitment and be ready to pursue it. So I would say the next step is this renewed commitment by the operators. Indeed, the regulator is ready to make whatever provision that is required in the regulation so that we ease out the operational environment. Do we need to create some regulatory sandboxes so that we develop some aspects of the scheme and then we tighten? These are things that the regulator is ready to do. But indeed, the most important issue is that the safety of these monies is the ultimate priority. Because if somebody will lose a dime, a kobo, to be honest, that may be the end of the scheme as a whole. Thank you.
Thank you very much, Dr. Farouk. I think you can tell all of us on the panel, I think have been interacting with you over the years. And it's great to have the kind of longstanding partnership and hear you say that the regulator is ready to engage with the industry and to embrace innovation while still being mindful of mitigating that risk on behalf of the consumer. So thanks very much. Oguchi, I wanted to now ask you a little bit more, talking about on that point around regulation by PENCOM and also just maybe more broadly, the broader, what we in the development space tend to call the enabling environment for deploying micropension services. What are you hearing from the operators? Are there certain challenges in this space that could be made easier by reviewing some of our policies, procedures, regulations, et cetera?
Yeah, I'm smiling because the regulator is here, so I don't know if I'm at liberty to share some of the things I'm hearing from the operators.
He said he's ready. I wrote it down. Dr. Farouk, regulator is ready. We'll call you.
But to be honest, I want to commend PENCOM because they are collaborative. They've sort of had a collaborative stance since the birth of the industry. So that's a plus for the operators in the industry. But as always, the operators will always want to push the limits, and the regulator is there because, like Dr. Farouk said, they have to toe the fine line between innovation and safety. And we thank God that the industry has really been safe. It's somewhere investors have come in, and it's somewhere that people are looking at as the next frontier. So that's good. But things like, and as on the chat book, registration, for instance, what do micropension clients need before they get registered? NIN is something, and some people have said, can we do a tiered structure? Even though NIN is something that the government requires. So is it possible to register people without the NIN? And if they want to withdraw, then that comes in. So that's one thing that has come up. Another thing that some people talk about is perhaps, and I'm going to throw the cat amongst the pigeons, is perhaps to license micro pension operators. Some people have said, the way the PFAs are structured, some of them are managing trillions of naira, billions of dollars. They're not going to want to invest in micro pensions, or for them, it's not going to be a core. It's always going to be treated as the poor cousin. Why don't we get some people who this is their core and license them? And then we can begin to look at whether how those funds are managed and whether there has to be a tie to the larger PFAs. That's an option, and I've heard that a number of times. That's something that I want to throw out there. So another thing is just in terms of partnerships. So partnerships with other members in the financial services space, with the banks, with the insurance companies. How quickly is that partnership going on? And there's some work that PENCOM is doing along with PENCOM to find out how we can bundle products together. So most people have talked about the product. I know Parul Gautam spoke about the product. The product has to make sense, just in terms of the features, in terms of how we can connect. For instance, if I have a micro pensions account, then do I get a discount on my child's education fees, or do I get a waiver? So that has to make sense. And in terms of innovation, product development, we need to do a bit more in terms of that. So those are some of the things I'm hearing from the operators.
Great, thanks a lot, Akuche. And I'm sure that this will be a conversation that will be continued by the industry, including with the representation of the association. Laura, I'm curious if you have any additional comments around this question around enabling environment beyond what Akuche shared.
Yeah, I think we're talking about the demand, and obviously I think the demand will be there. But the supply, which Akuche talked about, is also really important as well. And I can completely understand that the period to break even can be a long time. We've talked to stakeholders in different countries, and some of them were sort of anticipating a very long time before they might break even. So you need to have the costs really controlled. Onboarding is very expensive, so to control the onboarding costs. Digital, I think, is part of that. Having agents is great, but just need to manage the costs, because that's it can be quite a big cost. And then you will need to recover that cost in some way from the contributions you receive, but you want to give value to the customers as well. So it's a really, really fine line to tread. So yeah, it'll be very interesting to watch this space.
Thanks.
Thank you.
I think I'm looking at the time. I think we may run a few minutes over. So for those who are on the webinar, if anybody can stay on, we'll probably conclude about 5-10 minutes past. And for panelists as well. So I have one last topic I want to come to before asking our panelists to give kind of a closing forward-looking remark. And that's around this topic of communication and trust. So we see in the data, and this comes up in every topic that we study, but we've seen in the EFINA data that trust is a really important factor. I feel like every time we run a focus group, there's always somebody who says, well, my cousin's neighbor had a pension account and wasn't being paid. So why should I put my money there, right? And I think, as has been mentioned on this panel already, there are different sort of types of accounts, and, there may be reasons that this has happened in the past, and reasons why we as an industry hopefully shouldn't, have that risk presented to consumers any longer. But I'm curious, in addition to what Parul was mentioning around being able to present customers their balance in this T+1 kind of time frame, what are some other kind of thoughts that the panel has for both communicating the kind of concepts around micropension effectively and building trust within the Nigerian community? And I think I'll just throw this sort of open. So whoever wants to speak to this, go ahead and unmute. You can chime in.
I think Dunji is looking at me and I'm looking at him. Okay. But it is, I think trust is the one thing that you grapple with once your product is out. And I think communication is the next thing, and they both go hand in hand. The reason I see it is in Hindi, and I'm sure in every other language, it is whatever you can see sells, right? So, but that's the one part, right? But I think making the communication relative to your target audience is the key. So, I can give you some examples, and I think that may work better to understand how we are able to build trust with the customers, and how communication sort of weaves into it, with a little bit of component again of the services. I never leave that out. So for instance, when we worked in Rwanda and in Kenya, understanding the society for me as an outsider was the key part to doing that. And I realized that well, I wanted, in India, because it works, so I came with a, sort of cache memory to say, maybe we should put some hoardings and things like that. It doesn't work. They only listen to radio, right? So, and they listen to certain programs. And while I think the marketplace activation is better than any other, right? So what I'm trying to actually say is that that's a learning that I realized is unique to probably Rwanda and Kenya. The same wouldn't happen in India. In India, we work with the partners who are at the front end, for instance, and I think this would be true for any country. Depending on what your delivery mechanism of savings and long-term savings, short-term savings, and insurances is also a key to how you will gain trust on your customer. So when you're going a B2B or a B2B2C, I think choosing the right kind of partners and their leveraging is the key to gaining trust. So for instance, we worked in India with SEVA, which is Self-Employed Women's Association. They have about over 3 million women who work together in it. I'm sorry, in India, we talk 2 and 3 million like they're 20 to 30,000 people, but because the product was right, the due diligence was done by SEVA themselves to be able to offer that product and find it to be the right mix for the audience who they sort of cater to further, whether for credit or other kinds of savings. So when the organization stood up and said that we bring this offering to you, the women who are vegetable vendors and tailors or doing hand embroidery or making some cane baskets, they are the ones who came up with small ticket sizes according to the product design, and then be able to have a touch point which can service them and answer their questions is where we gain trust. The communication came through dual ways of doing who they're investing with, who is Pinbox, may or may not be relevant, but the disclosure of the logo or any kind of visibility which is consistent, and also heard over the helpline or any kind of communication that SEVA did. I think it's a holistic experience for the customer. The trust can be built immediately depending on who the front-ending person is, or it can be medium term. And the reason I use that very carefully is because a lot of people are fence sitters till the first few take the plunge. And once it works for them, it's when the whole horde, the whole community comes together to engage with the product. And on the direct to customer, we have actually, in our experience, because it's the cost of delivery in direct to customer is very expensive. It is not so much in a B2B or a B2B2C because there is a cost sharing. In the direct to customer, we've only gone digital, and we've used tools which are embedded in the apps itself and not even gone to social media that much. So we have gone, so if there are some HR companies who are engaging about 2 million people who deploy gig workers to the larger organizations, we engage with those so that they have a captive audience wherever their attendance or their salaries or their balances are happening is also a marketplace for them to engage with other financial products. And hence the cost to acquisition of the customer is low, the communication is high, an app they use 2-3 times a day to look at other things, where they're also learning by repetition and rote also gives the confidence if this is coming up, then the offering must be credible. That's the one way of the trust. The other angle I would just like to bring in, and I'm sure Tunji wants to come in as well, is of the incentive structure. So when it is of a front-ending agent, whether it's mine or anybody else's, or even for the customer, periodic incentive structure works well. Validations work well. Certificates of appreciation work well, right? So whether it is giving free talk time for a certain amount of the best agent who works, or for the person who saves the most, if they are highlighted within the community, if they are given the golden, outside doors in villages, we've put gold medals as the best saver of the week, or these are just small things that go a long way for a certain community where we are trying to work. And I think to make to Laura's point about making businesses profitable, I think if we try and spread ourselves wide, you spread yourselves thin. But if you're able to contain and work with a certain geography, certain community, and work with lateral partners who are within that community, and you engage with that, then the example effect of being able to do a cookie cutter with the next with certain customization makes micro pensions a viable proposition in that sense as well. And I think the last and the most important point, we don't want to do the work of financial literacy, because being literate also doesn't mean that you're financially literate. But I think making the person understand what they're getting into is actually the key to also success, which is very difficult, which is the most difficult part, because you need trainings, refresher trainings, iterations, incentives, communication, trust. That's where if they understand it once, and I speak more on the behalf of women savers, if they understand it once, we've had savers from 2008 to 2022, and they are consistent even today. Even if they're saving small ticket sizes, after 5 years or after 3 years or after 2 years, when they're able to see the balances and compounding work in their favor, snap, they get everybody in. And then when I'm able to project those numbers and project sort of a show and tell, that works best. You can do communication for your stakeholders, you can do communication for your partners, but if you want to do communication for the person whom you're targeting, then it's more of the same with the show and tell, to Tunji's point, that then even the agent looks and feels like them, even if that person may run away with their money, they're not intimidated by that person. And I think that's where the trust is. Sorry.
Thanks so much. Does anybody else want to speak to that point? I know, Parul, you really covered a lot. Tunji, you look like you're. Is that a yes or a no? I just saw hands moving.
Yes. Sorry, I'm pulling everybody back, but I was nodding so heavily to her points, because it is so true, and it's weird how similar, and going back to Gautam's point earlier, it's so similar. It's so amazing how similar it is across the world. We say something at our bar that people who know better actually do better. So what you're going against in Nigeria, and I think it's anywhere in the world, is culture. So people think there's no pension plan for people in the low-income mass marketplace. In Nigeria, and I think the rest part of Africa, there is a traditional pension plan, and it is to have 6, 7, 8, 9 children, hoping that one of them would do well enough to take care of you in old age. So what you're really doing is bringing a new product to replace the product that they already have. I mean, in my culture, there is a prayer that says, Oma Todre no. For people who understand Yoruba, I mean, I'm sorry for this, but I just had to make it clear. It means your children will take care of you when you're old. And it's something that is passed on from generation to generation. Every old person believes that their children will take. So that's the traditional pension system. So going to her point about financial literacy is you have to make them fully understand why this is very important. And then it becomes automatic. You don't need to remind them after the point, because these people they live their lives in routine. So once you make them understand it, that is the hardest part, really. But you have to be committed to that part about making them understand it. And you build the entire ecosystem around the trust, and the person who is collecting it is also there. One of the people we partnered with in as in we're working with to help them on board, over the last couple of weeks that, we just reached out to them and said, lots of these people are SMEs. They live in local communities. We just onboarded 200 agents on Monday, and we're like, they live in local communities like Badagry. Is it possible to make some of these people agent bankers? And they were like, yes, let's do it. So because it's critical that the agent banker who is in their community is the one who is telling them about this new fancy product, which is micro pensions, which is like Ajo, Isusu, which can help you save for retirement. That is the way to be able to build it on multiple layers of the trust that already exists with these people. So forgive me, I was just really excited when she was talking about it, because it's what we see when we go out and talk to these people. Forgive me for ranting. It's just great to hear it.
Thanks so much. All right, so I think we've, as always happens, we always have so much good content that we could talk forever, but we're overrunning our time, and I don't want to keep you all for too much longer. So I think that we will, for today, just go around and invite each panelist to give sort of one concluding thought. And what I'd like to ask is for each of you, can you just choose one recommendation that you see, kind of a near-term recommendation? And this could be reiterating something we've covered, or maybe a topic that we've not addressed yet, that any of the stakeholders could undertake in order to drive more widespread uptake of micropensions. And I'll note, I'm not sure if Dr. Farouk is with us, because I know he had an engagement. Laura has also has another engagement, so she's had to drop off. So I'll kind of give her thanks remotely for her participation, but I'll invite the others to contribute. Maybe starting with Oguche.
I have more than one recommendation, so forgive me if I throw a number of things out there. What I think partnerships is what we need. Peru, Gatum, Pinbox, EFINA, I think we need to come together to craft something around Nigeria. I think partnerships is what we need, because it's not, as they say, it's not rocket science, not new under the sun. So it's been done elsewhere, and we can bring these things to bear. The regulator in Nigeria is open to innovation. And I think so. The next bit, I think, is product. Clearly, the product out there in terms of micro pension is not hitting the right chord with the savers. So there needs to be some project rejigging, and that's going on, that can be able to link with other social issues like education, health insurance, and things like that. And I think the third thing is communication. How is communicated? So micro pensions, just the way micro finance was, many people think it's really for the poor, but something we're finding in Nigeria is micro pension, and some of the communication we're trying to do is a self-sponsored pension plan, because it could be for the tech entrepreneur who has 2 staff, it could be for the government contractor who employs no one, but is quite rich, so just in terms of the way we communicate it, always seems, and when we do that, it excludes those other people. So just in terms of communication, I wanted to throw that out. So yeah, thanks. And then partnerships. I see Awaba here doing quite a bit on that. Well done, Tunji.
All right, thanks, Oguche. I see a message from Dr. Farouk. He did have to drop off to attend prayers. So next, I'll come to maybe Tunji. Your recommendation.
I think there are a few. I think the biggest part is the onboarding needs to be a bit more seamless, in such a way that if the person is able to onboard their NIN, we can be able to onboard the customer using USSD solutions. And if the customer wants to then make a withdrawal, then we can, ask for the other documentation, so that the onboarding is so seamless and simple. I think the other part is we need to do a lot of collaborative efforts in financial education. I see individual efforts, and Nigeria is very large. Those individual efforts are great, but it needs it needs a louder microphone or a louder speaker to be able to get to everybody. And we need everybody to hear about it, because pensions anywhere in the world is complex. Budapest, London, Singapore, Nigeria, it's complex. How much more to the average person who is self-employed in Nigeria? How do you explain this product? So we need to be able to have collaborative efforts to be able to spread it across to everybody. And I think there needs to be a lot of empathy. There needs to be a lot of empathy to the people we're speaking to. I sometimes feel and hear a certain level of, we're here to save you. When we're speaking to people where we're trying to onboard, like Oguche said, some of them are doing millions, billions in turnover every year. We need to be able to, we don't necessarily have to come off our high horse. We just maybe need to step down a little bit, so that we can understand the customer. And I think we have something very huge in our hands that we can really do something with. And fact that we do not have a structured social security in most parts of Africa, for Nigeria, it feels like this is it for this feels like it for me in lots of respects. So I think if we can get it right, it'll be huge, not for only us as businesses, but also the multiplier effect for Nigeria going into the future.
Great. Thanks, Tunji. And Pearla, I'll come to you next.
Thank you. I had 2-3 points and I'll go over them really quickly. I know we're over time. I think the first part is we're in a very transitional phase. And the reason I say this is we are catering to two kinds of audiences. One, who are already nudging towards their, say, 45 or 40 and above, who still have 20 years of compounding, who are looking at pensions more realistically, but they are not very tech savvy, but want it more desperately. And then we're looking at the younger people who need to save less, are more tech savvy, but they're not looking as pensions on their radar. And this is the reason I say that we're in a transitional phase, because in my lifetime, I have to cater to both. One for now and one for people who will sort of live beyond at least my living years and be getting a pensions even after I am gone. So I think there are two kinds of markets that need to be catered to in terms of the audience that we're looking at, not the markets, but the audience that we're looking at. And hence the approach to two has to be different. The smartphones versus USSD, aspirational versus need, here and now versus here and now pensions for somebody who's older. So I think everything has to be targeted in terms of implementation, while the product at the back end may be the same. The second thing I think is that for businesses like this to be successful, a public-private partnership is very important. If that is not done, things are very expensive. Trust, building blocks to reach masses is something that I think could be considered for regulators to actually take this to scale. For regulators to give incentives upfront, maybe more economical than actually be paying old age pensions to millions, which will not be a meaningful payout at age 60. So incentivizing front end may be something. I'm sure Gautam spoke about it. I'm sorry I wasn't there for his entire session. The third thing I think is to understand is, if you ask anybody, whether it is Asia, Africa, Latin America, all of the Southern Hemisphere, do they want pensions? Everybody's going to say a yes. But I think it's important to understand why they can't or will not. And one of the reasons is, no matter which income group, and I'm talking about the people who are savers, I'm not talking about who cannot, is that their interim needs are not taken care of. Hence, long-term seems a little too far. So if micro pensions has to be successful, it has to be bundled to make it more liquid. If you make the pension products too liquid, we will still get the same outcome by 2050, because they will have no savings for pensions. So if micro pensions has to succeed, there have to be interim needs that need to take care of, which will allow them to put away something with partial withdrawals and still have something at age 60. Otherwise, doing all this is going to be a futile exercise, which will give us the same outcome by 2050. And I think the last is getting the product right, getting the communication right. As long as people trust it, as long as people understand it, people are serviced well, they will be taking it. And in all of this, technology is an enabler for sure. But making the processes easier, as Tunji was saying, is key. But I think communicating to those two sets of people is very important. And maybe education at the school levels is very important, especially for those in the class 11, 12, and the ones in skilling schools who then become older and become the next generation to understand how to manage their monies better. Thank you.
All right, thank you so much. I think this has been a really insightful session. I want to extend sincere gratitude to all of the panelists, and also Pinbox for both the panel contributions and the presentation earlier, which, as I mentioned, I'm going to take and read again tonight because it was really insightful. So as always, there's a lot more we can say, but I think we'll end there to respect the time of the participants. I want to, and before I hand back over to TJ to quickly round up, I just wanted to address one question in the chat, which is around the role of EFINA. And for EFINA, really our goal, our entire mission is to make the Nigerian financial system work better, especially for lowest income groups. And so the reason that we come to work in the morning and the reason that we're in this session is that we just want to do whatever we can to enable the sector. We do research, which we've shared today, convene different stakeholders, and we're happy to continue the conversation. So I would invite anybody who's joined us today to reach out after this if you have any follow-up questions, if you'd like to see kind of more about the data, if you want to use the data and need some help in doing so in developing a product or other solution, or if you have sort of ideas around how we as an industry can engage and you think EFINA could support that. So just wanted to sort of pick that up and also take the opportunity to make that offer. So thanks again to the panelists, and I'll hand back to you, TJ.
Thank you very much, Ashley, and thank you to the panelists. We really appreciate your passion and the insights that have been shared. Particular thanks to all the presenters today. When I was listening to the presentation from Pinbox by Gotham, the $8.2 billion amount is really standing out for me. It says that if 10% of non-pension working population right now in Nigeria decide to say 50 naira a day, we can mobilize $8.2 billion in 10 years. That is amazing insight, and that's something we really need to look up to, and hopefully we can achieve that. And when Parul was also sharing that, distinguishing the audience, the audience of now and the audience of in the near future, that would really help in product development. Thank you so much for that insight. I think we've learned a lot today. We've learned quite a bit, and I hope that all stakeholders will continue to collaborate to leverage all of these opportunities to make the pension system work really well especially for the low income earners in Nigeria. All the materials presented at this event will be circulated via email. We've already dropped a link to where our insight, the A2F insight that was presented by Dr. Tony, that's already in the chat box, but we'd also send it via email to everyone that registered for this event. We have a recorded session also on our YouTube channel called EFINA Nigeria. You can go back and share the link with colleagues and friends that would be helpful too. Feel free to reach out to us at efina@efina.org.ng. As Ashley said, that's why we wake up in the morning. It's just to make the Nigerian financial system work for the low income earners. It's really important to us. So you can reach out to us via EFINA at EFINA, EFINA at efina.org.ng if you need any sort of further engagement on this topic or other financial inclusion related topics. Thank you so much to all our participants today. We thank you and we appreciate your being part of the webinar, and we wish you a wonderful rest of the day. Bye-bye.
Thanks. Bye-bye.
Bye.
Thank you.